So, of course, there's been a lot of things that happened, but you got to start the week off with what happened yesterday, right? Combination of geopolitical fears and hawkish Fed speak lead to 2% intraday reversal on Thursday. And everybody's talked a lot about how we haven't had a down 2% day, but essentially yesterday was. What are the thoughts on yesterday?
Well, it wasn't a 2% down day. It was a 1% down day, but a 2% reversal. Mm-hmm. But I don't believe in geopolitical fears or hawkish Fed speak. I think that's all garbage.
You don't believe in geopolitical fears? I mean,
no,
that's real.
No, there's no such thing as geopolitical. Well, what's the difference between yesterday and today? You don't have any geopolitical fears today?
Well, people calm down a little bit, but
no.
Something happens. So, for example, I mean, when 9/11 happened, the market dropped. That's
I understand that, but then if the market goes lower from here, it's not because of geopolitical fears or hawkish Fed speak. It's because the market was grossly overbought. That's why.
Tony, anything to add?
No, you kidding me? With that attitude, no way.
March non-farm payroll report came in this morning, came in a whole lot better than expected, and it's obviously going to make the Fed's decision a little bit more complicated. We saw gold hit a new high for the 6th day in a row. Crude touched 87 for the first time since October. So we've been seeing this happen more recently. We're seeing gold, we're seeing oil hit new highs. Matter of fact, you saw that yesterday. That was one of the more interesting things that I watched. You watch gold and oil start to spike higher, right? Markets came in. Bonds initially dropped and then obviously jumped higher. So it did seem like there was some fear overall in the market, different than what we've been seeing more recently. As of now, the market's pricing 65 basis points for rate cuts in 2024 and 165 basis points versus what we saw in January of 160 basis points. So obviously, rate cuts have calmed down this rate cut talk, especially after this number that we got this morning too. Tesla, big move this week. Earlier in the week, missed on deliveries, second worst performing stock in the S&P 500. Is it a buying opportunity?
I don't know if it's a buying opportunity, but we're long Tesla.
I was going to say, we've been nibbling from the long side.
So we've been nibbling from the long side. It hasn't hurt us, hasn't made us any money. Being long Tesla and long Apple has not lost us any money, hasn't made us any money yet. We're kind of just...
Hasn't helped or hindered, right?
Yeah, kind of just spinning our wheels.
Whether or not we think so, clearly people did yesterday up until the big move to the downside. Tesla was up big yesterday before that crazy.
It still closed up on the day.
Yeah, it did. Microsoft did too, right? Like there was a couple of names I was looking at to see what closed up. I think
Meta did.
Meta did as well.
I don't know about Microsoft, but Meta did.
That's what it was, Meta. I got some good charts for you guys here, all right? You ready for this one?
Yeah.
So the first one.
Sure.
These are days since 1989 where the NASDAQ was up 1% intraday and within 1% of a 52-week high, but finished down 1% on the day.
Okay.
And I want you to remember these years because I got something on the next slide. But
okay.
You can see, it's happened twice in each of these years. In 99, 2000, 03, 2020, and 2024. So again, it was up 1% intraday, within 1% of a 52-week high, and then finishes down on the day. I was listening this morning. You sound like you think the market should be lower. To your point, if you really believe that, this kind of gets to your point, honestly. I mean, these are years where we start to see an intraday reversal. I thought it was a good time to take a look at this once again. This is VIX yearly average, right, for each year. So I took the liberty of highlighting the years where we're above the historical average of VIX. Historical average is about 19.5. All the years in red are where we're above, right? 1990. Obviously, for those who weren't around trading, you can see how volatile it was during the dot-com era, 97, 98, 90, basically to 2003, where, I mean, VIX was, God, how'd you guys manage that, man? That's crazy times.
Which one?
Look at these, 6 years in a row?
In the 90s you're talking about?
Yeah, 97 to 03. I mean, look at that.
You know, when you're on the trading floor, you don't realize it as much because you're kind of
too close to the fire.
You're too close to the fire, and you're in one product only.
Right.
You don't even. Well, first of all, the VIX was crazy in 2000, 2001, 2002. We had a high VIX then.
Yeah, 25.8 on average, 27.3 on average.
Yeah. It wasn't. The VIX didn't start coming down until 2000, after 2003, and then all the way to like 2008, it was just in crash mode. I mean, we got down to single digits.
I started in the business in 06, and 12.8. I remember being at the firm. At the time, they were in risk management mode because VIX had jumped 1 point, and it was like they were so short that they kind of freaked out. So I remember those times, obviously. But you can see 08, 09. What we just said on the previous slide, where we had 99, 2000, 2020 and 2024. You can see, obviously, for those who didn't know, those are some interesting and volatile years, except for this year, right? 2020 was volatile. This year, average VIX has been 13.7 so far. We talked about how low volatility is, but just thought this would be good for people to see. When they think something crazy happened yesterday, that was really nothing. I mean, we've had some real volatile years throughout time. For those who've been trading for the last 4 or 5 years, you understand now what it's been like. You see 2020, 2021, 2022, you got a real education. So keep this in mind. And another thing, talk about longest VIX futures contango streaks. We're in the midst of one, 109 days right now from sometime in October to basically today, 109 straight days. You can see, this coincides a little bit with what we saw in the last slide, but again, you can see April of 04 to May of 2005 was 273 straight days. We had one a couple of years ago, January to January, basically 248 straight days. So this just gives you an idea of how long we've been in contango. For those who don't know, contango is when front month futures trading below the next month. It basically implies a low volatility environment. So we're still amidst the low volatility environment until proven otherwise.
Yeah, and that's very telling about how long this rally's been going on and how long in the tooth we are. When volatility goes into backwardation, it gets hairy.
And we just came out of one of these too. I just forgot. The third longest streak was from October 22 to October 23, 247 straight days.
I know. This is the kind of markets that scare me, only because it's been so long since there's people that have been trading for years now that have never seen
anything else.
Right.
Yeah. I would have to agree a little bit. I mean, well, it depends for the last 2 years. But like we just showed in the previous slide, 2020 to 2022 was, average VIX was fairly high. So it depends on who's been trading and how long.
Fair.
Let's move ahead to the next slide. So looking ahead, we had obviously jobs report this morning. A couple of things we got coming up for the month: PPI, CPI next week. Then we get into earnings. JP Morgan, I'm probably Citi, I think, starting next Friday. We got Goldman on Monday, Netflix out there on the 18th. You got Google, Meta, and Google, Microsoft, and Tesla on the 24th, that is. And then Meta, on the 24th, right? Yeah. And then Meta on the 25th, Amazon on the 26th, and then Apple's all the way out on the 2nd. So as far as earnings go, what your month's going to look like, of course, there's a lot of others in there. So dollar early in the week touched 5-month highs before fading. We'll see where it ends up today. We'll see this market ends up today. Fed futures now shift pricing on the first full rate cut to September from June. Of course, these things tend to move around. We'll see what actually happens. Palantir and Oracle partnered up on something involving cloud and AI solutions. Palantir, man, stock is it's so disgusting to me. I say this every single time. I don't know what it is.
It's a stock everybody loves to love and doesn't give you any love back.
Thank you. I couldn't have said it better myself. March CPI is next week, Wednesday. Fed meeting minutes are on Wednesday as well, and then PPI is on Thursday. And finally, research for the week, market measure, more juice for IV. Check that out.
That was a good one.